Hi, this is Kieran from VIA Value Investing Academy. We are meeting again for our deep dive series produced by VIA. Now, before I start, for the past, I think 2 weeks has been very interesting, very exciting because Federal Reserve, or by the short term called Fed, actually increases its interest rate by 0.75 percentage point, which is the biggest increase since 1994. But before I go into the detail about what this interest rate adjusted by Federal Reserve means, can I just double check that you are able to see me and hear me? Yeah, if you're able to see me and hear me, can you just type what lah, or just type one, right? Just type something in the chat so that I can. Okay, Wendy, I remember you, right? Right now we have about 74 people on the YouTube live. Are you able to, maybe I just let my teammate share the screen, right? Can see, right? You're able to see the slide, right? Okay. Wendy, I suppose you can see lah. Okay, good. So let's get started. Jerry say yes, Leong. Okay, so it's a couple of second lags, right? So let's come in. Now, so if you look at this, a thing called interest rate, 0.75%. 0.75% is a very small amount, right? I mean, so what's the big deal about increasing this interest rate by 0.5 percentage point? And another article which is also dated very recently on the 17th of June, it also states that the federal rate hikes, which is the interest hike, right, will end sooner than you think. But what does that mean for the stock market? Yeah, so this is two articles. And of course, I think yesterday or today, right, our soon-to-be Prime Minister Lawrence Wong and our current Deputy PM, right, he said something like, because of this inflation and so on, so government is going to launch a series of a program, right, to help Singaporeans. Yeah. So if I remember correctly, I think the first thing I can remember lah. I think it's $300 a GST voucher, something like that, because he already said that GST will increase. So in other words, there's no delaying. Yeah, even though the opposition wanted to stop it, right? So that's a $300 GST voucher. It could become in the form of cash. I'm not very sure, but it's $300. Another one, I think, is a $100 utility voucher, something like that, for the increase in the energy prices. So total, I only remember 400 plus 100. And of course, there are other series of things that are given to different parties. But this 300 and 100 is the one that really strikes me, right? I think for most of you, this 400 maybe is not a very big deal. But for those low-income families who are staying in a rental flat, who are really struggling day to day, I think this 400 meant a lot. So if you think that the 300 plus 100 is very little to you, I think maybe you can donate out. So let's come back to here, right? So how does the interest rate affect us? So this will be the first topic that we're going to talk about this evening. And the second one, there'll be a break in between, right? And the second one, we'll talk about a case study, and the company that we're going to talk about this evening is called Silgan Holdings. Silgan Holdings. Now, as a value investor, we always want to look for companies that people do not pay attention, so that these companies tend to be undervalued. But obviously, we want to find some good companies. So rarely we are interested in Tesla, Palantir, this sort of a sexy company that YouTuber talks about. So these will be the two topics that we are going to talk about. So very good, loud and clear. We have 104 attendees attending our segment. So let's start with the first one, interest rates. Yeah, interest rates. So where are we today? Now, for the past few deep dive series, I've talked about some of the quantitative criteria and the qualitative criteria, right, that most likely is going to point to one direction, and the direction is a recession. And by the way, the bear market is already here. So no need to say this one is an undeniable fact. But whether the recession will come or not, we do not know. But all these indicators that I've shared over here point to one single direction where the recession will come. But again, what does it mean, right? So let's talk about the bear market first. Now, in my past couple of YouTube live video, I talk about what is a bear market. So this is a quick recap. So a bear market is where stocks, right, see a 20% decline from a recent high. So the recent high drops by 20% or more, and then it's called a bear market. And usually it's accompanied by qualitative overall pessimism, right, on the Wall Street. So specifically, let me share with you what it means. Now, on this video that was produced about 2 weeks ago, I did talk about the criteria, qualitative and the quantitative, that's pointing towards a recession. And here is accompanied by Tyson Food. So that was our most recent episode of Deep Dive, right? And we also done a lot of things. We done cryptos, NFTs, new bank, and of course everybody know that right now those so-called crypto investors call the current era, right, the crypto winter. Crypto winter, even though Singapore is summer, right? So those people who bought crypto is actually winter. And then we talk about the Netflix and so on, PayPal. We done a lot of things, right? So this is our YouTube channel. Now maybe I'm just going to pause a couple of seconds here if you still new to us, right? Can you just take out a phone and then just scan this QR code and then subscribe to our YouTube channel? I think right now, if I remember correctly, our YouTube channel should be about 6.2K, I think, subscribers, right? Or 6.3 already. So you can see here, this is a bit outdated, right? 2.81. So let's assume that 3. So I think for the past 6 months, we have grown our subscribers from 3,000, right, to 6,000. Of course, our goal is 6 million. So I will have to do this until retire. Okay, maybe I reincarnate is still about 6.2K. Okay, so scan this and then click on the button that pops out and then subscribe to our YouTube channel so that anytime when we produce any high quality, relevant investment content, right, that's going to affect you and me, yep, you will be notified. And the best part is you can actually set alarm. Okay, so let's get started. So what is inflation? I mean, most of us would know what is really inflation because the price of goods that you purchase goes up. But this is the common definition that we know. Yep, rates of rising of goods. So in order to us, our conclusion is whenever you hear this thing called inflation, it's a bad thing, right? But not many people know that there are two sides to inflation. One is low inflation, and obviously the other one is high inflation. Sora, thank you for subscribing. Yeah, for those people like Peng Tak, all this, yeah, can you all please subscribe? Okay, so why low inflation is bad? Now, low inflation is quite interesting. That means the demand, right, for goods and services is lower. Yeah, you know, I don't think I want to buy right now. Things are so cheap. I can always buy things later, right, in the future. So the demand for the goods and services is lower. And because of that, people will be thinking, since it's going to get cheaper in the future, why should I buy now? I should buy in the future. So they would delay in spending money, right? Delay. So they think, procrastinate, right? And because of that, there are fewer people buying things. There's a delay in purchases, right? So slowly the economic growth slows down. And because of that, the wages will be depressed. And of course, eventually, one of the so-called most infamous, right, global financial crisis, 2008, 2009, it was caused by low inflation. And of course, when recession comes, unemployment rate goes up. Yep. So this is the extreme of inflation, which is the low inflation. Then how about the one that is affecting us right now, right, which is the high inflation? So high inflation is also bad. So remember, things become more expensive. Yeah, I think I posted one post on Facebook, I think a couple of months ago, where I went to Killiney, an international building. So one cup of teh O 220. 220. You know, after I paid for that teh O, I become quite besong, right? Yeah, so I told myself never will I go inside the Killiney, right, and buy teh O or kopi ever again. So you see, things become expensive. I refuse to pay, right, because it's just too expensive, So what will happen? You see, lower purchase of goods, right? Yeah, I swear I'm not going to go there and buy that teh O ever again. So what will happen if I, okay, too expensive, I don't want to buy, right? So eventually, economy will slow down. When things are so expensive, economy will slow down. And then eventually, it may lead to a recession, and then unemployment rate may go up. Unemployment rate will go up, right? And remember, right at the beginning of this deep dive, I told you that our DPM Lawrence Wong talked about this 1.5 billion package, right, to help the vulnerable and businesses to fight inflation. So remember inflation, let me just go back here again. Remember, right now we're talking about high inflation, right? So he launched certain, this 1.5 billion package to fight this high inflation. And just now I talked about this GST, right? $300 voucher and then a $100 rebate on utility. Yeah. This amount is, to me it's not a lot, but I mean, government give, what to do, right? I mean, give also complain, don't give also complain, right? Okay, anyway, so let's come back to here, So let's talk about this, So since the interest rate, the inflation has really gone up, something must be done, right? So while the government, wanted to give out goodies, but they cannot give out forever. They cannot give forever, and then the money has to come from somewhere, right? Yeah, so something has to be done, right? So let's let's how should I say, teleport ourselves into US. Now, in the US, there is one key entity that is very important that managing all this inflation. Yeah. And this party, right, is called Federal Reserve, which is equivalent to our MAS, right, Monetary Authorities of Singapore, in Singapore. And the chairperson is called Jerome Powell. Now, and this is how the guy looks like. Yeah, you have to remember this guy's face. This is very important. So every time when he's open his mouth, he could shake the world. Yeah, and let me share with you how it's being done. Kelvin said my friend bought 2 plates of nasi padang and $24 at Jewel. So the nasi padang on top got Jewel. So $24. Okay, so let's see how this Jerome, right, will try to fix the 2 plates of nasi padang. So remember, this Federal Reserve is a centralized body. Yeah, you know, like MS. Yeah, and they had to juggle between whether, oh, is the inflation too high and the inflation is too low. So I want you to imagine that this picture, right, represent Federal Reserve in the middle, and then it's trying to juggle between two. And the current context right now is there are asset bubbles. So if you look at crypto, right, wow, you know, like as though everybody can make money, right? NFTs, people spend tens and hundreds of thousands to buy like a JPEG files, right? And then of course we're talking about the high inflation, which is the nasi padang. Now, so this Federal Reserve try, hey, this thing is happening and that thing is happening. So what are the tools that I have, right, to manage these two? Yeah, otherwise, most likely it's going to lead to a recession and then everybody will suffer. So there are many tools that this Federal Reserve can play, but the most important tool, right, is called interest rate. Yeah, it's like you got many tools, right, to fix things, right? So the key tool, to fix things is actually called the interest rate. So now, what does it mean, right? So Federal Reserve, remember, recently just increased this interest rate by 0.75%, 0.75. But what does it mean? So let me show you a flow diagram. After the flow diagram, you can take a screenshot. Yeah, screenshot. So this is how it goes. Remember, the trigger is asset bubble. Yep. The high inflation. And then the economy is too inflated, right? Overheated, right? Wow, things become very expensive, right? So remember, this Federal Reserve comes in. Hey, I need to stop this crap, And they stop this crap by using certain tool. And the main tool that they're going to use is called interest rate. Yeah, so they call the shot. So what they do is they decide to increase and not decrease. They decide to increase the interest rate. And just to let you know that in the US context, this interest rate is also known as the federal fund rate. It's a synonym. Yeah, correct. The cai peng also expensive. Who asks you go and order the fish, right? So you increase the interest rate. So what does increasing the interest rate means? Before I carry on, in case you take a HDB loan or you want to take a personal loan, yeah, which means that right now if you're American, you go to the bank and then you want to borrow, and then this, after borrowing, right, the interest rate has increased. Am I right to say that it makes borrowing more expensive? Yeah. So right now, right, it makes loans more expensive, not only for individual like us, it also makes loans more expensive for businesses. Yeah, and what's the case? So this is like a stick, It's like a stick to force people not to borrow, right? If you force people not to borrow, then how? You go and borrow, people cane you, right? You don't borrow, how? I think I better don't borrow. I think I better spend less. But if I spend less, wouldn't it be great if I can save more money in the bank, right? Because right now the bank interest rate has gone up, right? So you see how this thing works. This is like a two-pronged strategy. Once the interest rate goes up, it punishes people for borrowing, right? Yeah. And it also encourages people to save, right? Because since the interest has gone up. And since people save, they chose to save money versus spending, right? So am I right to say that the inflation slowly drops because the demand for goods and services drop, right? Yeah. And since the inflation is being lowered, am I right to say that this is a solution to dampen this high inflation? Yeah. So this is the whole cycle. Something I want to simplify for a layman like you and me. Now, if you want, I'm just going to leave this thing here. You can always take a screenshot, right? Yeah, I think this is quite important. It's quite important because sometimes when you read news, people talk about interest rate. It sounds so strategic, and you find it very hard for us to understand. Yeah, so this is the big picture, right? Later, I'm going to relate to you. So remember, increase interest rates. But before I show you the next slide, I think for the past many years, since the global financial crisis, the interest rate has been quite low. And because the interest rate is quite low, right, do you see those condominium, how should I say, those showroom, right? Always people go and chiong and buy condo. Yeah, so when I saw those YouTube videos or Facebook Live, right, or Facebook video, I saw people rushing to go and whack to buy condo. I got this feeling whether the condo really very cheap or I'm too poor because people are rushing. So I suspect people like them, either they got a huge amount of cash or they really take very high loan because the interest rate is low. Yeah, it's cheap to borrow. So everybody go and spend money, right? All this sort of thing. Now, but moving forward, since we are VIA, right, Value Investing Academy, so what is it got to do with investing? So let's look at a quick history. Now, just to let you know that the current inflation rate for US, I think it's about 8 point something. 8 point something is really high. So let me share with you the benchmark, right? Now, the last time the inflation was this high, it was in 1974. So it's about 10%. So 8% quite close, right? Quite close. So it's quite bad, it's quite bad. And then the last time, other than 1974, right, it was in 1980. Then after that, you realize that this inflation has been dropping, but it spikes again, right? So now the key thing is, since Federal Reserve are the one who juggle, right, between high inflation and low inflation. So what is the optimum? Now the optimum inflation rate for the US economy is about 2%. So right now it's 8. 8. Maybe I just draw a hypothetical one. Yeah, so the Federal Reserve is trying to reduce this to this. 6 percentage point. It's going to take a while, right? Yeah, take a while, Now, remember, it has remained low ever since until recently where the inflation goes up. Because everybody just gamble with money, right? Now, so let's move to this one. Now, just to let you know that the current US inflation rate, is about 8%. Remember just now I told you? 8%, 8.6. 8.6 is really very close to the high, right, in 1980 and 1974. So it's bad. It's bad. In short, it's bad. So we could feel it. Now, let's come back to us. Okay, since we are talking about investing in companies. So how does this higher interest rates affect the stock market overall? Remember, right now we are in a bear market, right? So I want you to remember that there are these two dots. One is high inflation. Yeah, and then the Federal Reserve want to counter this high inflation by increasing the interest rate. And then right now we have a bear market, right? So how does the dot, these two dots connect? So let's start with this again. So remember, Federal Reserve increased the interest rate, which is the federal fund rates. And when they increase the interest rate, am I right to say that, just like I said, it make borrowing more expensive, right? Yeah. So right now, borrowing expensive. Yeah, we better don't borrow so much. Yeah, but for businesses, you cannot say don't borrow, you see. Like for example, Tesla want to build a car plant in Germany. I mean, if he want to produce more cars, he has to build. Yeah, build already, he has to borrow, right? Cannot say, because of interest rate go up, don't build. Yeah, so they have no choice. So if they needs to continue to do business, right, while the costs go up, am I right to say that then the profit drops? Yeah, because profit, right, is equals to revenue minus expenses, right? And then right now they are borrowing, which is part expenses goes up, and assuming that revenue stays the same, right? Am I right to say that overall the profit will drop? Okay, so if overall profit drop, what will stock market respond? Now, generally, when you see companies not performing, right, usually speculators who knows quite little about companies, they will start dumping stocks, right? Or they will start to shift to something that's fixed income. In fact, this afternoon, one of my grads just sent me a WhatsApp. This is a real story, right? She was saying that this UOB, right? UOB is promoting a bond where it's the coupon rate, which is the interest rate. Remember, high, if you save, right, high interest rate, I think the coupon rate is about 5.4%, guaranteed, Yeah, so I'm a bit skeptical, especially for corporate bonds, right? So what I did was I asked her to send me the detail, but she sent me a 2 PDF file. So I realized that the company that offered this so-called 5-point-something% guaranteed bond, right, is actually HSBC. Yeah, HSBC, right? So usually bonds do not have such a high yield, right? But because people are shunning stock market, right, they are worried, right now bear market, right? So what they will do, they will shift the money from stocks, since they already sell, right, to fixed income, which is things like bonds. Yeah, so this is a phenomenon. Yeah, so right now bonds will become a hot thing. Even the Singapore saving bonds are 2% also oversubscribed. People chiong, right? So to us, it's a good thing. Why? Because when people dump stocks, when people sell stocks, right, it makes the price roll, and as value investors, it become cheaper. So what will happen? People start selling, panic, shift their money from stocks, right, to bonds, right? That's when the bear market, right, is here. You see, huh? And remember, just now I shared about the bear market from the recent high to the current share price with a 20% drop, right? Yeah. So this is how the high inflation trigger off the bear market, because people are dumping stocks, shift the money from stocks to bonds. Yeah. But I love bear market, right? Because the last time we have a bear market was somewhere in Q2 2020. And before Q2 2020, right, was 2008, 2009 during the global financial crisis. But the Q2 2020, I think this is circumstantial, right, because of this COVID. Yeah, if I remove this COVID, the last time we have this bear market, right, is actually 14 years ago. Yeah, so what does it mean? Now, the bear market do not happen every day. You do not walk out of your HDB, suddenly got one bear walk past. Now, it's quite rare, right? Let me show you the timeline to show you how precious the bear market is, right? Now, remember I talked about the Q2 2022? And then before this, it was a global financial crisis, right? 2008, 2009, right? A human being caused all this problem. Another one is 2001, right? When the dot-com bubble burst. If you're old enough, you will know. So if you see the gap between the bubble, right, and the global financial crisis, maybe it's about 7 to 8 years. 7 to 8 years. And then from here, right, if I skip the pandemic until right now, June 2022, right? Oh, sorry, this is 2020. So from here to here is about 14 years. 14 years. So let's say average out, every 10 years you're going to have a bear market, even though you do not know exactly when, right? But let's say average, there's going to be like one bear market every 10 years. So what does this mean? Remember I told you it's quite precious. And keep these 10 years in mind, right? Now, let's say for all of you who are watching this video, let's say you are age 35. And then the bear market takes place every 10 years. So what does it mean, right? Yeah, 45, maybe you kena one, right? Your first one, right? And then 55, maybe you kena your second one, right? And then maybe 65, you kena a third one. And if you live long enough, maybe 75, you kena your last one. Okay, huh? So in our entire life, you will only have four bear market, right? Assuming that every 10 years you have one bear market. So ask yourself this, do you think you want to start investing at age 75? It'll be too late. Yeah, it'll be too late, right? There's no time for you to grow. Yeah, 65, maybe, you know, it stretch a bit, maybe. Yeah, but the most precious time that you can start investing is actually today, assuming that you're going to have your first bear market here and bear market here. So in your life, right, the one where you can take action, I think it's only 3 bear market. Now, I'm going to give you a few seconds to digest this so that you know how critical, right, this opportunity is that's happening right now. So one more time, right? Yeah, assuming that we 35, we got to learn about investing, and then age 45, the bear market comes. We only got 3 bear market, 1, 2, and 3. So in other words, right, if you miss this bear market, you wait for another 10 years. But why is the bear market very important? Because, I'm going to slow down, because after every bear, there will always, with no exception, for the Singapore economy as well as US economy, after every bear will always followed by a bull market, which means that if the bear market comes, now if you don't buy a good company, you will never have a chance to sell when the bull market comes, in which you already know that after bear will be a bull. So I'm going to give you a few seconds to digest this information, right? So that number one, in our entire lifetime, assuming that we live under 80, there's only 3 or 4 bear market. So that's one. The second thing, right, if you miss the bear market and the bull comes, and then people make money, you can only suck thumb. Okay, now, so let's move forward. So let's do a quick recap again. So what is a bear market? Remember, just now I talked about the 20% decline, right, from the recent high, and I give you some examples. I've done this in a previous deep dive, but this is a quick recap, right? When the dot-com bubble burst from year 2000 to 2002, right, yeah, the decline from the recent high was more than 20%. In fact, it was about 50%. So it's a bear market. And remember, after bear, it will be followed by a bull, right? Yeah, this is a historical fact, right? Now, and how much can you make out of a bull market if you invest in a bear market? So here we are talking about maybe close to 100% in 5 years. So I let you digest this first. 100%, right, in 5 years. You don't have to waste time on bonds, right? Hey, by the way, this is 100% in 5 years. The bond is 5%, right? Yeah, every single year for 10 years. Yeah, so why should you choose bonds when you can choose a good index fund, right? But let me show you more historical fact. Okay, global financial crisis, 2007, 2 years, it drops, bear market, 50%. And then as of this afternoon, the best part is, as of this afternoon, year 2022, right, it's 450%. Yep, from here to here, about 11 years. So if 11 years, you can make a total of 450%, it's still quite good, right? Because unlikely, our salary will increase 450% 11 years, unlikely. Yeah, unlikely, But in investing world, right, there is no limit to where you can reach in terms of money. Yeah, but remember, you can only reap such benefits provided some variables fall in place, and I'll share more about this, right? And remember, I talked about the COVID. COVID, the bear market took place on the 23rd of March. The price dropped. It's still less than the crisis, okay? So bear market, right, 33%. And then as of this afternoon, it has risen by 60%. Yeah, but of course, if you look at the past bear market, remember, I told you every bear market is followed by a bull, right? But I just want to show you facts, right? Now, these are some of the data for bear market as well as correction. Correction is about 10%. Bear market is about 20% or more. Now, since World War II, World War II, so you realize that every time when the bear market, right, the share price will fall. Under this number, do you see all the negative? All the negative, right? Now, and different duration, right? Some bear market damn short, which is 1 month. Some is really long, like 21 months. Yeah, but do you notice that after every bear will be followed by a bull? This is the most important. The duration, I think, is still not so key. So if I may summarize, all these numbers. Now remember, after every bear, it will always be followed by a bull. So a bear market typically lasts about 13 months. And then the recovery takes about 21 months. So if you summarize maybe half a year, easy to remember, right? Half a year, and then the recovery may take close to 2 years. 2 years, Now, and let's assume that right now it's a bear market. And a typical average, it lasts about 6 months, right? So what does it mean? You have 6 months of window period, right? To purchase the things that you want to purchase. And if you miss this 6 months window period, what will happen? It will start to recover, right? You start to Fed come in, our government want to do this and do that, it start to recover, right? When it start to recover, the price is going to go up, And then you cannot say price go up, you want to buy things, it's going to get more and more expensive. So remember, bear market, 6 months of window time is really a good time for us to really become wealthy. Become wealthy, right? So historical fact, US economy, including Singapore, every bear market will be followed by a bull market. Okay, so bear market will be followed by a bull market, right? Okay, sorry, just now somebody posted a lot of things, right? The big time Choi. So now Fed is serious in beating the inflation, even though economic and so on. Wow, very good, I think while I was talking, you did some Google, right? Market is still buying the rate hike narrative that hurt risky assets. Very good. 75 kena recession too late. Okay, anyway, in short, 6 months window time, right? So when is the best time to buy? During the bull or the bear? Okay, this one I don't want to ask you. I think all of you are quite intelligent, right? 262 people. Obviously, you want to buy during the bear, right? But remember, if you do not buy during the bear, you cannot make money when the bull comes, it's too late already. But most people, right, they will buy during the bull. And then after that, sell during the bear. Which is the crypto winter, right? So most people will always buy high and then sell low. Why is that so, right? Because during the bear market, it's quite scary, to buy things. Because you buy at this price, it may drop lower. So usually bear market people are quite jittery, right? But for value investors, we don't really pay attention much to price. We look at the value of the company first. So where are we today, right? Bear market, negative 21.6%. More than 20% from the recent high is called a bear market. So obviously, so where should we prepare ourselves? Only when the recession comes or before the recession arrives. Now, for the past 2 months, just to let you know that we have been doing a lot of YouTube Live. And for me, right, I've shared all the possible indicators that only point to one direction, which is the recession. Nobody wants a recession. Nobody wants a recession, right? But we must always be prepared before the storm comes. Whether it comes or not, eventually it doesn't matter. But you must always prepare, right? Which is why inside my bag, I always carry an umbrella. Doesn't mean that I carry an umbrella, there will be a rain, right? But when the rain comes, I have an umbrella. So in investing world, it's quite interesting. People do not carry that umbrella. They wait for the storm to come, and then they search left and right to see whether anything can do. It's too late already. Okay? Now, so remember, we always want to prepare ourselves before the recession arrives. And even though Singapore government is quite generous in giving out all these things, but remember that the job of the government is not to make all of you to be financially free. It's not to make all of you rich. Yeah, their focus is to help the vulnerable, at least for this current 1.5 billion, right? Injection of funds. Yeah. And then remember, DPM Wong has already said that the GST hike is going to proceed as planned to fund rising spending, obviously, right? Yeah, the civil servant recently, mid-year, has this bonus, right? 0.375. I think their annual increment is, don't know, from 6 to 14%, right? Yeah, something along the line, and then they got bonus and all this thing. So something must fund them, but they're also humans. You mean they no need increment, man? Okay, Now, inflation and rising costs of living, not the only challenges. And of course, when I look at this article, there was a lot of things. It's talking about the war, right? And this afternoon, I just read one article talking about Russia actually makes a lot of money, right, during this war. But whether can they continue to make money or not, we do not know. And one of the reasons why they make more money during this war, right, is because there was an increase of supply of, I think, oil and gas, and then recently coal to Europe. Wow. So if that's the case, and there is no telltale sign, right, that Zelensky wanted to sit down and lakopi with Putin, right? So I think this war is going to last a while, and then of course US doesn't seem to want the war to stop, because they keep supplying the weapons, right? We support you. Now, what do you mean by support? I give you the knife, you go and fight yourself. So I support you. So, no sign, right? And then of course, our inflation rate, no need to say. The kopi, the $11, cai peng, whatever lah. So remember, to keep preparation, before the rain comes, carry the umbrella, right? You must know what to do. You must know what to carry, right? Which is an umbrella. And if you want to carry the umbrella, you must also have the money to buy the umbrella. No money to buy the umbrella, right? Yeah, which is why you also need to have the cash. The cash, So right now, you may need to do some self-reflection. If you look at your bank account, inside no money, right? I think you have to do some self-reflection. What have you been doing for the past 10, 20 years of your life, right? So you need to have cash to buy the umbrella. And what sort of umbrella to buy, right? So we are going to share the case study called Silgan later on, right? But before that, I'll just need my teammates' help. Now, before my teammate play this video, some of you may have seen this video, so you just pardon me, right? Now, I just want to let you know that out of these 280 people who are watching this YouTube live, I'm quite sure a substantial amount are our grads. And one of the key reasons why they need to spend like some cash, right, to learn about investing is because they want to prepare themselves. And I just want to direct those people who are our grads. Now, grads, this is the time already. This is the time already. And Wendy is just one of the thousands of grads across the 11 cities and entire Asia, right, that has made preparation this way back, right, to 5-6 years ago. So let me share with you what are the results that this Wendy is harvesting right now by investing in right companies during bad times. So I'll just let my colleague play this short, inspiring story about Wendy.
Hi, I'm Wendy. I graduated from VIA batch 32. Previously, I was an admin manager, and now I am retired. I'm financially free now. In the past, actually, I do buy and sell of stock, mainly in Singapore stock, without or little knowledge of the company that I traded. I was actually basically doing just trading or speculation, and the result wasn't that good. Kenneth appears to be very sincere in sharing the knowledge. Besides the basic content on investing, he brought up this option strategy, which really impressed me. I find that it's workable the way he has made. The analogy of collecting premium, just like an insurance company, really attracted me, I should say. So I was very keen and decided to go for it. I became more aware of the risks and rewards on investment. Okay, it really changed my mindset from a trader to become to be an investor. So I must do the due diligence, to evaluate and assess the qualitative and quantitative part of the company. Actually, I didn't really put that much. I was staggering, the amount that I staggered. I don't one time put all. So until at one time, I was thinking I cannot just put in money. I've set a limit. First 3 to 4 months, I make 40%. In fact, I made the 100K in 8 months. After joining the class, I tried the option strategy. I started with 1 month. Okay, then subsequently, I also go for weekly. I wanted to increase my profit, so I put in more. With the profit that I make, I sort of like compound it. Okay, I go and sell some more option. With the intrinsic value that I work out, I give myself a bigger margin of safety, about 40 to 50. I check the chart, and look at the price level. And also the volume. So when it's at the oversold stage, I sell the option at the price 30 to 40%, 40 to 50% lower than the actual price. To tell the truth, yes, it's definitely more than what I earn, per month. I was very happy when I noticed that I'm able to make that much amount every month. I was thinking maybe I should consider to retire early and concentrate on this value investing. At least I have a lot of free time for myself. Because for the past 25 years, I mean the time is been tied up in the company. So a lot of things I couldn't do. So now that I have a lot of free time, I was thinking to spend more time with my mom. I love to travel around if I can, right? And at the same time to do I was thinking to do some charity work. I think you have to follow the proven strategy that was taught by Caden. So you do not panic when the price is down, because you know that you have done your homework. Next, you have to continuously improve your skill. By attending the gathering class or investment seminar to remind yourself of the theory and concept of investing. So with increasing experience, I believe you can be successful too.
Okay, ladies and gentlemen, welcome back. Just to let you know that Wendy is just one of the many graduates who has been with us. So people like myself and Wendy and quite a great number of graduates, we don't really have to worry too much about recession or bear market. In fact, you look at Anthony, right? There's one post by Anthony. Anthony said that I've been preparing these days since I graduated from VIA 4 years ago. Yes, Anthony.
Hi, good evening, everyone. My name is Hilary, so I'm here to share about the next case study, which we will be sharing about Silgan. So I believe my colleague has shown you the slides, so we'll jump right into it. So first off, we will do a bit of disclaimer. So here we are actually illustrate the application of how we use value investing methodology and also the methods to show you how we analyze a real life company. But we are not giving any recommendation to buy, sell, any of the stocks that we share here. It's just purely to share how we are using this value investing methodology to analyze a company. So in no event shall VIA or any author like me, Caden, shall be liable to the viewers, guests, or third party for any damages or any kind of damages arising out of the use for this content. So neither Mind Kinesis Investments, VIA, Value Investing Academy, or the authors like Caden and me are operated or affiliated with any broker and dealer or licensed financial advisor. So now with the disclaimer gone, we will move on to the fun part. So we will be deep diving into the Silgan Holdings. So you can see that Silgan Holdings are mainly about a lot of packaging. So what is really Silgan Holdings? So first off, it's actually a leading manufacturer from US about packaging solutions for consumer goods product. So what is a consumer good? Consumer good are actually daily necessities that the consumer buys for consumption. So they actually involve in 6 main categories, which is food, beauty and personal care, pet care, healthcare, home care, and beverages. It means that they produce the packaging products and then they sell it to the manufacturers of these markets to sell it to the customers. And the company is actually founded by 2 founders known as Phil Silver and Greg Horrigan in 1987. So you can see that the name of the company is actually the combination of these 2 founders, where Silver, the seal, and Horrigan, the gun, they combine together become Silgan. So this is actually just a fun fact. And the ticker symbol for this company is called SLGN. Okay, so this Silgan Holding, they actually have 113 manufacturing plants in 4 continents, like the North America, Europe, Asia, and South America. So you can see from the map, a lot of all those icons in like 3 colors. So what are they? So the first one is dispensing and specialty closures. Then the next one is metal containers. And then next is custom containers. But what are these? No worries, we will share it in the next part. So we will talk about the products. What actually does this Silgan company produces? So first off, they actually manufacture and sell the products, the packaging products to the consumer good product companies. And they separate into 3 business segments for their product range. So the first one is the dispensing and specialty closures, metal containers, and also custom containers. So from the photograph, I believe you have a better idea like what are these. But we will deep dive further like what are they really. So first off, for dispensing and specialty closures, they actually design, manufacture, and also sell. First is a dispensing system. So from the photo, you can see that there's spray pumps, there's sprayer as well. So dispensing, it actually means that they deliver a precise amount of liquid from the container. So imagine that when you have a container, you wanted to pour out some liquids, you can use a spray pump or a pump to deliver how much you want. Like for example, when people say, how much amount of shampoo should I use to wash my hair? Like for long hair, people will suggest 50 cents, or short hair will suggest maybe 10 to 20 cents. But without the pumps, it's quite hard to measure if you just pour it directly. But with the pump, you can actually accurately dispense the amount that you want. So these are actually used in these products like healthcare, home and garden, personal care, fragrance, beauty, and food products. And then the next one is metal and plastic closures. So closures is actually a device to close or seal the container. So you can see that there's a metal cap, there's a seal lid to seal the containers. So it's mainly used for food and beverage products. And for this segment, they have 46 manufacturing facilities in 4 continents, and these are actually their customer base. So you can see that they actually produce these products and then they sell it to these consumer goods products like Coca-Cola, Colgate-Palmolive, Nestle, P&G. These are some of the brands that we are known of. And then the next one is metal containers. So these metal containers, they are actually made from steel and aluminium, and they are mainly used by food products, processors, and also packagers. They are now one of the largest manufacturer of metal food containers in North America. And according to their annual report, they say that more than 50% of the market share is in US. And they have about 44 manufacturing facilities in US and Europe. And these are the customer base for the metal containers. So you can see Campbell, Del Monte, Hormel Foods. These are actually canned food products. Okay, so next one, custom containers. So what is really a custom containers? So custom containers are actually plastic containers. But why they call it custom is because they can help the customers to customize the size, the shape that they want. So these are mainly used for shelf-stable food, personal care products, and also some healthcare products as well. And the next one is thermoform and non-barrier bowls and trays. So what are these? So thermoform, as you can see from the picture, there are some black plastics, white plastics with a specific form. It means that the plastic sheet is put on top of the mold and then they press it. So this is called a thermoform. And for non-barrier, it actually means that some plastic containers, when you put some biscuits or crackers, after a few days, you will find that it will become less crunchy, or like the Chinese say, lao hong. So non-barrier means that they does not allow the air or oxygen to pass through or to permeate through the container, so that it will always maintain the crunchiness and also the freshness. Airtight, yes. So it's mainly used for food products, and they have about 23 manufacturing facilities in US and Canada, and these are their customer base. So you can see that a lot of the names are consumer goods products, food product company, that they purchase these packaging solutions from them. Okay, so next we will see how they actually generate revenue for the past year. In 2021, they generate about 5.7 billion, and metal container take up the largest portion from the total, contributed the most for the total revenue. And in a geographical sense, North America contributed the most in 2021. And in the latest first quarter of 2022, they generated about 1.4 billion for the first quarter, and the largest portion that contributed was metal containers. But we can see that dispensing and specialty closures are also quite close compared to metal containers. And in geographical sense, it's also still North America. So that is how they generate the revenue. And for future plan, because currently they are one of the leading manufacturers for the packaging solutions, so they wanted to enhance their position as the leading manufacturer for the consumer goods product. So first off, they wanted to supply the best value packaging product, but what really is best value? So they said that they wanted to offer products that are of high quality, reasonable price, and also excellent service, because this one of the principles that they raised out is that they wanted to produce quality products and services for their customers in order to gain an advantage against their peers or competitors. So first off, is a value-added features that they list out is a quick top, easy opener. So for example, like this. So an easy example is that, for example, one day I wanted to buy a can or a tin of corn, and when I compare the prices, $1.50 and $2, because of inflation, we will tend to go for $1.50, right? So I purchased the $1.50, and when I go back home, I just realized that I need a can opener. It's because the difference between $1.50 and $2 is the $1.50 does not have this quick top opener, but the $2 has a quick top opener. So these are the value-added features that they had on their products. And another thing is that they have custom design containers to meet the customer demands, because certain customers, they need to have certain shapes or maybe certain volume to package their products. Unlikely that they can one size fits all. So with this, they are able to customize the packaging for the customers. And then the next thing is that they wanted to maintain as a low-cost producer. Why? It's because they wanted to sell their products in a competitive pricing. So first off, they had a very efficient organization structure to minimize any expenses. And also they invest in new technologies to improve their production. And they serve their customers from strategically located plants. So earlier on from the map, we see that they have about 130 manufacturing plants worldwide, so that for example, if the customer from Europe needs some products, they can directly purchase from their Europe plants instead of from US and then export there, which is incurring certain cost, logistic cost. And then next, they also have enhanced their profitability, because other than lowering the cost, they also want to increase the profitability of the company. First off is to improve the efficiencies, and also they wanted to rationalize the plant operation to make sure that whether does the plant able to create the value that they want, and also increase the profitability of the company. If let's say the plant does not produce the results as they wanted, they may consider to either to shift the operation to another place and close the operation to minimize the manufacturing cost. And then the next one is they expand through acquisition and also internal growth So how do they do that? Because they wanted to increase the market share and establish themselves as a leading manufacturer in order to expand their customer base, their geographic presence, and also their product line. And we can see from this, their past acquisitions from 1987, where they first established, until recent year, these are the product range that they have. So the yellow ones are the closures and also the dispensing systems. The green ones are the metal containers. And then the red ones are the custom containers. So you can see that they are very strategic on acquiring certain companies that can add value to their current portfolio. Next, we will see their economic moats and also who are their competitors. So first off, what is an economic moat? So from the picture, you can see that there's a castle and also some knights, some soldiers wanted to attack the castle. So economic moat means that whether does the company has the ability to maintain its competitive advantage over their competitors in order to maintain their market share and also increase their profits. So you can see, in order for the soldiers or the knights to attack the company, they need to cross over the moat. But if the moat is very wide, they will need to put in a lot of effort to attack. But if the moat is very narrow, they can easily attack the castle and the castle will crumble, which is not the company that we wanted to invest in. So for Silgan Holdings, they say that they have a sustainable competitive advantage. So what is it? So from here, when I was doing research, one thing that they list out is their intellectual property. Because they are manufacturer, so they have certain technologies or know-hows, trade secrets to manufacture their products, the metal containers, the custom containers. So with these trade secrets, they are able to produce high-quality products. And also economies of scale. Because they are a very large manufacturer, they are able to provide a very competitive price to their customers, so they can compete by price. And also, they have a very large customer base, because earlier on when we were looking through the products, there's a lot of different brand names that they have, and the relationship between them is with a multi-year contract. So let's say, for example, company A, when they supply the product to them, they usually take, like, let's say, for example, 5 years contract. So within that 5 years, company A only take the packaging solution from them, and they might not be purchasing the packaging solution from the competitor. So within the 5 years, it's as if the sale for those packaging solution is secure. But after 5 years, they will need to renew the contract. So this is some of the moats that they have. And next up, we will look at the competitors. So for Silgan, they compete with manufacturers with the similar packaging. Some consumer product companies, they manufacture their own packaging solutions, so they are actually also competing with them, other than the manufacturers that just purely manufacture to sell. And they actually compare with quality, pricing, and also requirements such as whether how fast they can deliver to them, or whether are they able to support if they have any issues with it. So first, for dispensing and specialty closures, these are some of the examples of their competitors. And they are actually competing against the quality and safety of the dispensing and closure system. And then next will be metal containers. And these are the competitors that was being listed out. And other than the manufacturers of the similar packaging, they are also facing competition with plastic, paper, glass, and composite materials as well. Because for Silgan Holdings, metal containers are mainly used to packaging foods and beverages. However, in their annual report, they actually mentioned some of the advantages of a metal container, which is, first thing, it's more durable compared to glass. And also, they mentioned that it's less costly to transfer, which I think that compared between glass or some other things, tin should be slightly lighter compared to glass. And then another thing they mentioned is for the food products to keep inside the tin, they manufacture it in a high temperature to maintain the quality so that it can be kept for a longer shelf life compared to other container types. And next up will be custom containers. And these are the list of the companies, the competitor companies. And they actually anticipate innovation in resin composition. So what is a resin? Resin is actually the raw material used to produce the plastic. So For example, if there's a better raw material to produce a plastic, people will tend to use it, which is maybe it's much more sustainable, or maybe it's easier, or using less energy to produce it. And also, if let's say there's a better technology to manufacture all these plastic products, but for Silgan, they actually have their own R&D to do their own research to make sure that they are using the newer technology of manufacturing these custom containers, and also some newer resins to produce the plastic containers as well. Okay, so now we will go into the nitty-gritty part, which is more on the numbers. So first off, revenue. And from what we can see throughout the years, the revenue has been increasing year on year, and it was not really being affected during the two recessions, during the dot-com bubble in 2020 and 2021, and also the financial crisis recession during 2008 and 2009. But in 2016, there was a drop. So when I was doing research, it was actually there was a decrease in sale as there was a lower unit volume sold. But if we were to see of the overall trend, we see that the revenue has been increasing year on year. So based on the value investing methodology, this is considered a pass because it has been in an uptrend. And then next, we also look at net income. So what is really a net income? Net income is actually you take all of the revenue and minus off all the expenses, whether does the company is making a profit or a loss. So from here, we can see during the dot-com bubble and also during the financial crisis, the net income has been increasing as well. But in 2016, it drops. It's because earlier on, we have established that there was a reduce in sale. And in 2017, suddenly it shoots up. It's because they acquired another company for dispensing and specialty closures, and also there was a slight tax rebate during that year. But in 2019, it drops back down. Why? It's because they are having an organizational structure, and they mentioned that they wanted to optimize the manufacturing footprint, and also they closed certain manufacturing sites in Spain, which is not generating the results that they want. But all in all, if we were to look at the overall trend of the net income for the company, we can see that it's in a positive and uptrend. So based on the value investing methodology, this is considered a pass. And next, we will look at the earnings per share. So what is really an earnings per share? Based on the value investing methodology definition, it means that for every share that the investor invested, how much of the earning can the company generate? For example, if the EPS is about 3, it means that for every share that the investor purchased, the company is able to generate $3 of profit or earnings. So earlier on, we see that the net income has been increasing year on year, and the earnings per share is actually following very closely based on the net income. So we can see that the trend is also a positive upward trend. So for this, it's considered a pass as well. Okay, next we will look at their operating cash flow. So what is an operating cash flow? So operating cash flow means the cash flow that was generated from the normal business activities. And we can see that for the past two recessions, the cash flow has actually been increasing. But in 2010, there was a sharp drop. It's because the cash was used to refinance their senior notes. So what is a senior note? So in here, I will not explain in depth about what is senior notes, but in one of our videos, which is about Twitter, we actually explain in detail what senior notes is. So maybe you can explore about that video to find out more what is senior notes. And also they use the cash to repurchase some shares, so which ends up in 2011, the operating cash flow goes back up. Okay, so when we look at the overall trend, it is still in a positive and upward trend. So this one, based on the value investing philosophy, it's considered a pass. Okay, so now we'll look at debt to equity. So what is really a debt to equity, and why are we interested to know more? Because whenever we purchase a company, we wanted to make sure that there's no big hole in their pocket. So based on the value investing methodology, this is the definition. It means that for every $100 of the equity, the company cannot take more than $50 of debt. So that's why it has to be lesser than 0.5. But when we look on the right axis, we notice that actually Silgan Holdings is more than 0.5. So what actually happens? And also in 2016 and 2017, it's actually more than 3 of the debt to equity ratio, which is considered very high. And when I was doing research, they are actually using debt to finance for the acquisition. As we see that earlier on, there's a lot of acquisition. They purchase a lot of companies in order to grow the company, but then they also take up a lot of debt. Is this a worrying sign? So now we will look into the financial statements. We saw that 2016 and 2017, it's about 3.33 for both years. And in 2016, when we compare to the past year, it actually drops in terms of shareholders' equity. It's because they used to repurchase their share during that year. And then in 2017, we noticed that there was a sharp increase in the long-term debt. Why? It's because they used the debt or the senior notes to acquire the West Rock, which we showed earlier on in one of the slides. Okay, then next up, we further look into the last 4 years. We saw that the debt is actually creeping up, but the shareholders' equity is also increasing. As a result, the debt to equity remains fairly constant even though the long-term debt is increasing. So as long as the company is maintaining profitable and also the shareholders' equity is increasing, the debt to equity ratio will slowly decrease. But because based on the value investing methodology is more than 0.5, this is considered not a pass for now. Okay, so now we will explore what are the risks. So we know roughly the background, how the company generates money, and whether is it a good company. So now we will consider what are the potential risks will derail the investment. So first off, is high debt level. It's because they incurred debt to finance the acquisition to grow the company. And then next, cost of production. Earlier on, Caden has shared about inflation. When the inflation is high, the cost of production will also increase, and it will affect the input costs such as the raw materials, energy, and also logistics. And thus, it will affect their profits. And also, should they lose their multi-year contract or maybe the customer, it will also affect their revenue. It's because in the packaging solution, early on we have seen that other than competing with other manufacturers, they are also competing with the consumer goods company that they manufacture their own packaging as well. So it's actually considered quite highly competitive. And also, whenever there's a lower crop yield for fruits and vegetables, it will affect their metal containers demand. It's because early on we see from the revenue generation slides, metal container is one of their highest contributor for their revenue. So if let's say some companies, they say that, oh, this year there's a lower crop yield, I do not need too many of the metal containers, it will also affect their revenue as well. Okay, so to conclude, Silgan Holdings is actually one of the leading manufacturers for the consumer goods product packaging, and also it has a large customer base, and it has a lot of product portfolio. And for the cons wise, it's in a very stiff competition industry, and should there be a high production cost, it will have an adverse impact on their business. And also currently they are quite high debt level, but as long as the company remains profitable, this will slowly come down. So with that, I've ended my sharing and also analysis about the Silgan Holdings. So I hope that you have learned more about how we use value investing methodology to analyze a company to decide whether this is a good company to invest or not. But this is not really a suggestion to say to buy or sell this company. So with that, I'll pass back to Caden, and thank you.
Hi, this is Caden. I am back. And by the way, before I continue, I just want to thank Hillary for doing this analysis, right? In fact, she done much more. But I told her, I think better cut down, right? Better cut down because there's a lot of details and so on. Now, just to let you know that even though Hillary has shared quite a bit about this company called Silgan, in fact, we can go even deeper, right, to talk about a lot of other things. Like, for example, right, just now, there is this Anthony, right, talking about what is the extent of knowledge required. So maybe I answer this question first before I continue. Now, Anthony was asking, this is quite a qualitative question. Now, what is the extent of knowledge required by one to understand this business? Yeah, so in short, I think if I could shorten this, that means how much you need to know, right, before you buy the stocks. I think that's probably what Anthony is trying to say. Yeah, so in other words, you need to know to an extent, I call it a sleep test, to an extent, right, that at night you can sleep comfortably, regardless of the movement of the share price. Yeah, regardless of the movement of share price. Yeah, so this is like a sleep test. Now, in other words, if you buy a stock, right, and then you hear your friend say, hey, you know, the stock that you buy dropped by 10%, and then you cannot sleep. In other words, you don't understand enough. So let me just give you maybe an example, shared by Warren Buffett. I think it's just a couple of days ago when I saw, I think TikTok or YouTube, right? And Buffett was talking about, movement of this share price. Yeah, so what Buffett is trying to say is the movement of share price tells nothing about a business. And then he gave an example. He gives an example, right? He liked to use the example of a farm. Yeah, I don't know why, but he liked to give an example of a farm. So he says something like, oh, if let's say I bought one plot of farm, and this farm give me something because it produces corns, it produces wheat, it produces something. So remember, this farm, right, has value. It provides food. And let's say you use $1 million to buy this plot of farm. Yeah. Then you have a neighbor, right, which has another separate plot of farm which is just adjacent to yours. And then one day your neighbor decided to sell the same plot, a similar plot that produces the same amount of, corns or whatsoever, right, at 500,000. You remember you purchased for 1 million, right? And then suddenly your neighbor decided to sell his plot for 500,000. Am I right to say that, wow, right now you have a 50% discount if you buy his plot, and then right now you got 2 plots, right? Yeah. So this price that the neighbor wanted to sell is the share price that we see that move up and down every day. Yeah. But the interesting thing is when the price of this plot of farm drops, people sell. Yeah, and when the price of this farm go up, maybe 2 million, right, people buy. It doesn't make sense, right? Because if you want to buy something, of course you want to buy it when it's cheap, right? Why do you want to buy when it's very expensive? So it doesn't make sense. So first we must understand that we are an owner of a business. We are not putting in money and then hope that somebody will be more foolish enough to buy the plot of land, right, at a higher price. For example, like crypto don't produce anything, NFTs, they don't produce anything. But the farm contribute to the economy, right? Yep, so that's one thing. So going back to Anthony, just remember this sleep test. In other words, if you buy a stock and then all these noises, right, couldn't make you sleep at night, that means you don't know enough. Yeah, don't know enough. So let's come back to here, right? Now, so you may notice that the companies that we talk about usually are not so sexy. Yeah, not so sexy, not so popular among YouTubers, right? YouTuber, influencer, TikToker like to talk about something very sexy, right? Yeah, this one disrupt the future, whatever. So the previous one, I think we talked about one company called Teladoc. We talk about Teladoc because people talk about this, so we want to know what is it all about. So we talk about Teladoc. So tele, right? Phone, right? And then doctor. Yeah, so phone, doctor, right? And then we also talk about Palantir because there's one influencer saying that, this is going to disrupt technology or whatever. And then previously we also talked about new electric vehicle and then as well as Tesla. Yeah, but I do not own any of these stocks. Yeah, because I'm quite old school, right? And I'm also getting old. So I think to me, I would prefer to invest in companies. Remember, it doesn't mean I'm right and then the rest is wrong. It's a personal choice, right? The choice. I think I will still prefer, I'm quite old school. Yeah, I still prefer to buy something, like I produce tin, right? Then Campbell use my tin to put their soup. Yeah, so every time when I go inside a shopper market, I see all this, I feel shocked, right? I feel shocked. So remember, when the money is being made from selling tins or plastic or whatever, right? It all smells the same. It smells the same when you buy a company that produces electric vehicle. Okay, so this is just my, this is something that I will sleep at night. Too sexy one, I cannot sleep. Okay, so this is a sleep test, right? So this is just me, doesn't mean that I'm right and then the rest is wrong, right? We make personal choice, personal choice, So now I just want to let you know some little nitty-gritty, and then how much effort, right, that Hillary has put in. Now, because the theme today is we want to prepare ourselves for a recession if the recession comes. And you may notice that all the graph that she put, right, there's 2 shaded region. And this shaded region, right, are occasion when there is a crisis. And remember, since we want to talk about recession-proof companies, so we want to trace back in time, right, in history, whether during recession, how is the company performing? And let me just use this example, right? So this is during a dot-com. Yeah, so you may notice that the dot goes up, and then it comes down a bit, and then it goes up, right? Yeah, you cannot expect, right, this one to suddenly go up like that. So over time, do you realize that it's quite recession-proof? Okay, huh? So this one they overcome. You see, dot-com bubble burst, it's got nothing to do with a Campbell soup. You know what I mean? Then the global financial crisis, one dot here, right, is flat. Then do you realize that it still goes up? Then after that, up and away, right? Yeah. Okay, so this is a global financial crisis. So I think in the next couple of months, we will try to find companies where during these two gray zone, right, the profit, revenue, everything all goes up nicely. So these are the effort that's being done by Hillary, which is a good thing. And then she bothered to explain about this. You know, earnings per share, what is it, and so on. And even though every deep dive, we talk about earnings per share, but we still repeat this. Because we don't want to assume that everybody knows. So we are worried about people who are quite new to this. So we go into all this nitty-gritty, right? So I have to give all the credits to Hillary for doing such a great job, right? Okay, so that's one. Kelvin Tan, will the rising inflation affect Silgan Holdings production cost? So I think the answer will be yes, definitely. So remember when who is fella, right? This Silgan has huge debt, which is 2.6 or something like that in terms of debt to equity ratio. And debt incurs interest, right? So if the interest go up, interest go up by a few percentage points, I think it will hurt the company. But the question we need to ask is, will this interest rate stay at this level, right, for the next 10, 20 years? So I think it's quite important for us to answer this question. So I mean, if I ask myself, I think it's unlikely. In the next 1-2 years, I think it will hurt them. Yeah, but whether would it hurt them in the next 10, 20 years, this is just my gut feel, right? Yeah, I don't think so. So that's one, right? So now I cannot just tell you based on intuition. If you trace back, if you notice the revenue goes up, the profit goes up, and then profit, remember, is after paying the interest, right? Goes up, and then the operating cash flow also goes up. And during the past maybe 10, 20 years, I suppose there will be time of low inflation, there will be time of high inflation, and there's also recession. Yeah, so I think 1-2 years it may be affected, but in the long run, I don't foresee, at least based on the data from the past. Yeah, based on data from the past, which is why we have to look at the pros and cons, which the Hillary has explained. So remember, the pros, they are the leading manufacturers, consumer goods, packaging, and you may notice all the so-called cans, plastic or whatever, right? Many leading companies, branded companies actually use their packaging. So for example, if you want to invest in, what was that, like Campbell soup, right? I mean, if the company Campbell is too expensive, you don't have to invest in Campbell soup. You can invest in the company that produces the can that Campbell soup use. Interesting, huh? So you can look up left, right, center, right, in the entire supply chain. Yeah, so large customer base, broad product portfolio, so that's pros. And this is quite true. Stiff competition. Now, if let's say you buy this company, let's say, for illustration purpose. Now, if you buy this company, if they are able to continue to grow their revenue, continue to grow their profit over the long term, 5-10 years, it simply means that regardless of competition or not, they are able to manage the competition. So that is a telltale sign, right? Yeah. The second one, high production cost. That is the interest rate. Yeah. So whether does it have an adverse impact on the business? So let's look at the profit, which is the net income, right, and the earnings per share and the cash flow. Now, if the numbers continue to go up, is still a good sign. Yeah. And of course, high debt. This is the one, I think of all the concerns, this is the one that I worry most. And in order for us to so-called accept a company with high debt level, right, their cash flow must be with certainty. Yeah, because ultimately, remember the debt, right? They borrow money, they require to pay the interest. And then they require money to pay the interest. So in order for them to have money to pay the interest, right, they must have cash flow. Yeah, so as long as the cash flow is going up, we don't want stable one. We want it to go up, right? Then this cash flow is able to use to pay the high debt level. Yeah. So nothing is perfect, nothing is perfect, right? So if you look at all this, so let's play a game, let's play a game, right? I like to play this game. Justin Tan say, how I know I've registered successfully. So maybe, Alex, if you are watching this, maybe you can help to reply Justin while I continue. Now, so let's play this game. Remember, every time after deep dive, we always play this game, right? So I just want this is just for fun, right? After listening to Hillary, do you think that Silgan is a low risk, high return investment, assuming that it's undervalued? Is it a high risk, high return investment, or is it a high risk, low return investment? Okay, please type your answer, right? A, B, or C in the chat box. Yeah, chat box. Now this is just for fun, huh? Remember, investing is not a polling contest, right? But we're just doing this for fun, right? To see whether are you still awake or are you sleeping. Okay, A, B, or C, right? Yeah, Alex, can you just reply Justin, right? Justin is asking how I know I've registered successfully. Okay, I'm going to give you a couple of seconds. Usually there's a lag time, right, between what I see and then the YouTube live. Yeah. Okay, Juming say A, Wendy. Wow, a lot of people A's, yeah. Casey, Mike. Some of the names look quite similar. Hey, if I scroll through, there is no B at all, you know. There is no C at all. Wow. Okay, everybody's A. Wow. Preston is B. Okay, very good. Remember, there's no right or wrong, huh? You don't, I mean, it's your money, right? Daniel also C, very good. High risk, low return. Good, huh? So for all of you, Leon say B. Okay, good. So if you look at all these numbers, there is a highest percentage, I think is A, and then with a sum in B and some in C. Now, I just teach you a small little hack, right, which is quite important. Now, depending on what answer you put, right, remember, if you have chosen C, obviously you don't buy, right? Okay, because high risk, low return, I mean, who's going to do this, right? Yeah. Then, if you choose B, also don't buy. So remember, B and C, right, is don't buy. So this is like a sleep test. Sleep test, only when you have chosen A with whatever information is available, right? Then A is a buy, remember. So this framework of like forcing you, right, to make a choice is actually created by Charlie Munger, which is the Vice President of Berkshire Hathaway. So I really like this. So every time before I make any purchase decision, right, I have to say A, B, or C. I always ask myself, where should I put this? And the moment you put B and C, stay away. A, then it's a buy. Then of course the next question is buy how much, right? Yeah. Okay, Now don't do things like put 90% of money inside, then it's quite dangerous, Okay, let me just move on. Now, by the way, it's not the end yet, because remember I promised, right, I'm going to talk about one company where the share price has gapped up about 114%, I think, from yesterday night. Okay, got it, right? So I'm going to exit already, Okay, so ladies and gentlemen, one last chance, no more. I shall see you soon, right? On the other side next month, gathering for subscribers only. Okay, goodbye. Thank you all. Thank you, Julie. Thank you, Sora.